Hey guys, good afternoon, everybody. This is a private one-on-one mentoring session with Anelli. Just gonna set up this room real quick. You guys are free to sit in and listen and watch. However, I'm not gonna be taking questions from the public. It's just gonna be a one-on-one private session with me and Anelli. So if you guys want to sit in and listen, feel free. Otherwise, I'm gonna send him the link shortly, and we'll get started in a few. All right, looks good. All right, it's good to go. Let me get this link sent out to Anelli. Give a few moments for Nelly to make his way in, and we should get started shortly. Make your co-host, Nelly. Hey, Nelly, can you hear me?
Yeah,
Perfect, man. How's it going?
pretty good. How about you?
Hey, man. Sorry for the late notice, bro. The dog's got Cody. His paws they like started peeling off because the floor was so hot, so I had to go bring him.
Wow.
Yeah, but he's doing all right. It's healing. It's just we've never seen that happen to a dog before, like their little rough part from their paws. And
Right.
we're like, man, what's going on with his paws?
Wow. Well, I'm glad that he's healing and everything's going a little bit better. So this is their last day at the vet.
Yeah, we're taking him again for another check-in, like for the next 2 days, just to make sure, because I gotta get Kai's teeth clean. This guy's getting old, and he's been with us at K2 from the beginning, bro.
Yeah.
I had to bring him to get checked out. So I keep forgetting to bring him in for their checkups. But now I gotta stay on top of it.
Yeah. Makes sense.
Yeah. So how's everything been with you?
So things have been all right. I went back home to Texas and I was there for probably about a month and a half. Wasn't really planning on being there that long, but it was just helping out my family. I'm the oldest, so my sister just graduated high school and she's getting ready to go to college in about a month. So my grandparents also were in town, so I kind of was just helping out with a lot of things, but I haven't been able to really be in the live sessions as much as I wanted to. And then also I've noticed from a lot of, or some of the live session that I have been in, that our official strategies have kind of been shifting a little bit as we're, in the summer market. And so I was really just trying to hope to, I guess, figure out how I can approach this summer market best so I can still, be able to take trades.
Yeah, no, for sure. Yeah, and I agree. Like, I was wondering where you were because I haven't seen you message me or post profits in a while. So I was wondering if you just
Yeah,
I figured, yeah, you probably went on vacation or something, but makes sense. But yeah, when the markets change, obviously, things are a little different. Market's a lot slower, a lot of sideways movement, and that's why I kind of shifted the strategies a little bit. The other strategies still work. Like there's a couple people in the group who still apply the high low momentum, the normal one we were doing before for our main strategy, and it still hits. Like I think Purity, she's been using it and she's had like straight wins, but the thing is like our patience kind of runs low on the live session because it doesn't come up very often.
right,
She kind of does it all day. So it makes sense for her because she's just waiting for them to come up. But for
right,
us,
right.
between 6:30 and 8, it's like kind of difficult because if there's no trades for like 2, 3 days, you're like, okay,
Exactly.
make some adjustments because we got to take something, you know?
Yeah.
Yeah. So yeah, I don't know if you've been familiarized with the let's see, man, I don't know if the last time you were around, but I think
Yeah, so no, so I've been in for quite a few of the sessions. I saw when you were kind of starting to apply that hour strategy with Maddie.
yeah.
But I know you hadn't like really gotten into a lot of the details in the actual live sessions because you didn't want to confuse people.
Mhm.
So that's one of them that I had kind of been like following a little bit, but again, I didn't, not knowing the specific things that you were kind of looking for on all the different parts of it. I, didn't want to just take the risk. And then I've seen the pullback strategy that you're kind of working on a little bit now at the whole numbers. And I have the, what's it called? I wrote down the strategy for that one.
Okay, for sure. Yeah, so what we'll do for this session, we'll go over those two strategies. And I'm not sure you're familiar with the liquidity rate already, right?
Yeah.
Okay.
Yeah, so the thing with liquidity is because I have been watching when we first started looking at liquidity, you were taking it mainly for like the 300, and then I saw the shift in market where it was, better to take it for about 100 pips, and then there were, I guess, where I kind of started getting tripped up a little bit was knowing when to and when not to take the liquidity, because like some strong liquidities would like push initially, and then some of them they would, test, come down a little bit, and then push. And so, yeah.
Yeah, exactly. So like with liquidity, it's like a love-hate relationship because like you can take it and it'll probably hit like, long term, but
Right,
it's a big risk, especially during the summer, because like you said, initially we were doing it like pre-summer and like the volatility was nice, it, go straight to TP.
right.
Now it's like sometimes we'll go straight to TP, sometimes we'll go sideways for like 10, 20 minutes. And you're like, man, do I want to pull out or do I want to hold on to it?
Hmm.
Or you can, always just go for the 100 and typically it'll hit. But then again, you're taking a risk because you're taking that negative risk toward on a risky strategy. It's not like the other strategies where we have like a good understanding of like the win percentage. Because with the liquidity push, it's like there's so many liquidity out there, and it's
Hmm.
hard to tell if it's like strong or not, right? Like today, liquidity hit, I think I know it was like 1 hour or 2 hour liquidity. And I was like, okay, it looks like it's going to hit. And it went straight to 100. And then were you on the live session today?
No, I wasn't on it
Okay.
today.
Yeah. So today that kind of happened. I think I still have the markup here, or never mind. It's not there anymore. I guess yeah, right here. Exactly. So let me see what I didn't put the time frame for it, but obviously it was blue. So it was above an hour.
Mhm.
It kind of went sideways for a while. Like it went sideways for like a good like 3 minutes, and then it slowed down, and then it just eventually went down. But typically for these liquidity pushes, they hit like within like 3 to 5 minutes. So
Right.
this is like at this point, I would consider holding on to it for too long, because the last thing you want to do is get caught when the market's going, sideways, and you're so close to your TP. And then when you least expect it, it just does the complete opposite, right? And that's like the worst feeling. It's like, man, I could have just pulled out at 100, or I could have pulled out at 250, and then it ended up reversing on you. So yeah, with the liquidity, it's not really one of the main strategies that I'm looking to apply. I use it as a confluence. Like for example, today, we had liquidity pushing down, and then we had the momentum pullback scalp, and that thing just went straight through because it's like a double confluence.
Hmm.
You can use that as well, or if you want to use it as standalone, you can still do that as well. Just have that like in your back pocket in case you want to, take something quick for the day and then just wrap it up. So I guess yeah, for today we'll go over that 1 hour strategy. I kind of have a good idea as to like how it's applied now. The only problem is the stop loss, because the problem with it being a 1 hour strategy is that typically you should have wide stop loss, right? Because you don't know where it's going to move within that 1 hour candle. Eventually it's going to hit your TP because it's going to go in both directions at least 100 pips.
Okay.
But how far in the drawdown will it go before it comes down into profit for you? So.
Gotcha.
So I'll give you what I'm using.
Hmm.
It's not necessarily the best, but Maddie's been doing it, and he's been taking like every single trade, and he
Yeah.
passed like I think 2 or 3 FTMO challenges within like 2 weeks. It's crazy.
Yeah, I
He
did
just
see that. Yeah, that's why
I
I was
was
like, wow.
yeah, I was shocked. I was like, man, why am I not taking that? Yeah. So now I don't know if you've noticed, like I use a different funding company that I've been trying out this week. It's called
Mhm.
Topstep. They're an
Yeah.
old company. I've known about them since I first started trading, but they're futures only. And back then I didn't trade US 30, so there's no
Gotcha.
need for me to trade with them.
Right.
Now that we mainly trade US 30, it makes sense because you can trade directly on TradingView. So it's like, it's so intuitive, and you just enter the trades on your TradingView chart, and your TP stop loss is nice, and you don't get caught in slippage. Like when it hits your TP, it actually pulls you out. You're not like in that, and it's like past.
Yeah.
Like
Yeah.
or that thing was like crazy, bro. Like sometimes you'll be like way past it.
Seriously. Seriously.
And it's annoying because it's like, they're manipulating the spread, so you can't get out of it. But it's like, bro, it's way past your TP, so you need to get out of that trade. Yeah. So
Okay.
yeah, for the most part. So let's go over the 1 hour strategy first. So let me see if I can find an example over here. I think pretty much all of them hit this morning. So let me see if I could pull up the one from. There was one at 6. The one I took this morning was at 5. So let me just go here to 5 o'clock. It's the 5 o'clock panel. Okay. So for this strategy, I haven't really have a set requirement for it, but this is basically what I look for. So I look for momentum on both the 1 minute and the 1 hour. So looking at this right here, you can see we have a sell momentum, right?
Yeah.
So right here on the 1 minute, we have a sell momentum. And then on the 1 hour, you can see that we also have a sell momentum right here, right?
Mm-hmm.
So you're just looking for momentum, so you know which direction price is going. And this is kind of just like the gist I was saying before. It's like, when the 1 hour candle opens, it's going to move in both directions at least like 100 pips. If you know what direction it's going in, odds of it going at least 100 pips down, because you already know price is going down.
Right.
Odds of it hitting are probably likely, right? You probably have like a 99.1% chance or 99% chance it's going to go in your direction, rather than hitting your stop loss. And you can take this pretty much all day. There's certain times where I've noticed where it doesn't work. So 6 a.m. Pacific time, probably just skip that every day, because like that's so close to market open.
Right.
Like it's 30. So like what I'll see sometimes is it'll go in the direction like maybe 50 pips. And then as it gets to like 6:10, 6:15, it starts to go opposite. And then it just blasts to your stop loss once market opens. So, yeah, 5 o'clock usually hits. I think 5 o'clock is good, Pacific time.
Okay. And so that's basically why you kind of wait till around 7 in the, about 7 in the session before you start looking for that move.
Yeah, for both, for the 1 hour and also for the momentum pullback, because market's moving kind of crazy between 6:30 and 7, but then at 7 it starts to smoothen out. Like it's going to start to have some sort of direction, so that you don't get caught in those fake outs and stuff.
Okay.
Yeah. So anyways, back to what we were saying, momentum on the 1 hour, momentum on the 1 minute. That's what I confirm. And then for the trend meter down here, all I do is I go to the trend meter settings and I just set it to 1 hour. So I just care about what's going on the 1 hour, because I just want to see what the long-term direction is, like for that next 1 hour candle.
Gotcha.
That's how I set it to. So you just want to make sure the momentum on the 1 minute, momentum on the 1 hour, both match trend meter on the 1 hour. And then once you have that, that's pretty much a strategy right there. So say for example, right here, this is a 5 o'clock candle, right? On the 1 minute. It doesn't matter if you enter on the 1 minute or the 1 hour. Either way, the candle closes and opens on that same candle.
So was that a pending signal on that one, or it closed?
This one closed. So this was at 4:59. So a minute right before 5 o'clock. So as soon as the 4:59 candle closes, this is where I would take my entry. Typically I've been using a 1040. I know it's not a good risk to reward, but like I mentioned, the 1 hour candle is just kind of big. So you just got to be able to survive whatever drawdown it goes into until it goes into your actual direction. So that's what I would set it to. That's what I'm working on. So with the 1 hour strategy, we're trying to tighten that stop loss as much as possible, but not too tight to the point where you get stopped out before it hits your TP. Most of the time you go straight to your profit target, but like during Asia session, that's where it becomes really risky, because it'll just move weird until it goes to your TP, but eventually it typically does hit. Because I'll check, like yesterday I took a trade during Asia. I think it was like 5 p.m. It didn't hit till like 8 p.m., like 3 hours, because it's so slow. But it went into like slow drawdown until it just spiked down to my TP. So it went into drawdown maybe like 300 pips or so. And then on the next candle, it just went straight down, I think on the 8-hour candle, and then it went straight to my profit target.
But if I was looking for trades in London session, then it's just about having the momentum align on the 1 hour with the 1 minute.
Exactly. Yeah. Yeah. So if you want a checklist, basically look for momentum on the 1 hour and look for momentum on the 1 minute. And then lastly, just confirm the trend meter. That's pretty much it. Because those are the things that are going to change quicker. The 1 hour momentum is probably not going to change. The 1 minute is probably going to change more often than not. And then it's typically going to be solid. Like if it's been red for a while, it's going to be red for a while. You know, it's not going to change to like green in like one hour candle.
But if it's blue, then that's a time when you probably wouldn't take the trade.
Exactly. I would just skip it until it chooses a direction again.
Makes sense.
Yeah. So that's pretty much it. I mean, this is how it looks like when the trade runs. You can see right there, it usually goes straight to CP.
Yeah.
And it blasts right through. So that's when I took this morning at 5 o'clock. So if we go forward, there wasn't one at 6. I'll show you why. So here's the 6 hour candle. You can see there's a bullish momentum here, so it doesn't match with it here. The 1 hour was still red. So I mean, I just added this 1 minute more recently. Before it was just 1 hour, like all directly off the 1 hour. But I wanted to make sure that like I wouldn't enter at like inopportune time. So like it would make more sense. I don't know if this still hit. It probably still did hit though. So let's see, 6 o'clock right here. So 10:40. You can see it still plays out. It's just, you know, you're not taking it goes into drawdown first before it goes down because they didn't have the momentum lined up ready. Like for example, if the momentum was there, it'd be perfect. Let's straight into TP. So yeah, so it's pretty simple. That's really what it is. It's not really that difficult. I mean, there's a lot of people that don't even understand it. Like Natasha in the group, she takes it on her phone and she doesn't even know like what she's doing, but she just looks to see if like it matches up with my chart and she'll take it. Like for example, right here at 7, like she doesn't have the indicators or anything, but she just watches my chart. She sees that there's momentum there. Trend meter is red. I mean, it's still bearish on the 1 hour. And then same thing, same setup. Go for 100 pips. This is actually it would have hit immediately on open. So this right here would be the 6:59 candle. This would be 7 o'clock. Like literally on candle open and went straight to TP.
Yeah.
So it's a super simple strategy. I mean, it's so simple that I do this at the gym, bro. Like I'll look at my phone on TradingView, like at 6:59.
I've seen you wake up a couple of times and just enter it, and I was like,
yeah, and I'll go back to sleep. That's literally what I do because it's so simple. And it's a set and forget, so you don't really have to worry about it too much.
Yeah.
I think there was another one here at 8. Yeah, again right here at 8 o'clock. So same thing again, right here. Again at 8 o'clock. Trade ran, kind of pulled back a little bit, but then eventually it came right back down. Yeah, so you can see here, like depending on the time of the day, it gets a little more riskier. I do see the 5 o'clock usually is pretty smooth. 5 is usually smooth. 7 is pretty smooth too. 8 o'clock is kind of iffy. That's why we get off the live, because you can see how the candles kind of go back and forth. It's not as smooth as a push. But then again at 9 it starts to smoothen out again. I don't know if there was an entry at 9, but if there was, no, there was none there. No buy, no sell signal. And maybe another one here at 10. No, so there's no more entries. You can see like sometimes it's smooth, sometimes it isn't. Today just wasn't the smoothest day. I applied during Asia, but I don't really recommend it. I feel like it's a FOMO kicking in, because I'll look at like 4 o'clock and it hits and I'm like, man, that's a good trade. And I look at 5 and then it just goes sideways for like a good 2 hours.
Right.
So, it always feels good until you get caught in that sideways movement. And then you're just like,
exactly.
you regret taking, you're like, man, why did I take that trade? So yeah, for now, if you just want to stick to like safe trades, probably stick to the 5 o'clock and 7 o'clock. I would skip the 6 o'clock. I think 6 o'clock yesterday lost. And every time I look at it, it always loses. So that's like the one setback, because the stop loss is so far out that if you do lose a trade, you got to wait for to make it right back.
Right.
But like with Maddie, he lost a couple of trades, but he would just keep taking them, like no matter what. He basically bought a FTMO and he's like, I'm just going to use this only for the 1 hour. And he would take every trade and not even check on it. Just take it, check. And then he ended up with 2 past challenges with like 3 days, which is crazy. Then he took like 16 trades and they all like majority of them hit.
I kept seeing it. Like he would just send them in and one after another. Yeah.
Yeah, that's crazy. So that's like that's an example of having no emotion, like just taking it, no emotion, letting it run, letting it hit TP or stop loss, and just letting it play out. So yeah, if this is one you want to look at, this one's cool. The so do you have any more questions regarding this? If not, we can move on to the next one.
Not regarding that one. This all makes sense to me. Yeah.
Yeah, super simple. The indicators pretty much do the work for you. You just gotta be there to take the entry.
Yeah, exactly. Cool.
I was trying to set this up like an automated strategy, but it's kind of difficult because it's like multiple time frames. And trading view doesn't really work that well that way. I can do it on MC4, but it's a little more complicated because the language is a bit different. So let's go over to the momentum pullback scalp. And we got so many strategies now. I always get mixed up with the names. But this one's pretty cool too. I've been applying this strategy like since I first started scalping, but that was back before I had the indicator. So I kept losing trades and I didn't understand like what I needed to do to prevent that from happening. But now that we have momentum, I'm like, okay, duh, like we have momentum. I know which direction to trade in now. Back then, it's easy to identify trend and stuff. But without having the indicators, it was always hard to understand like, okay, when does a momentum pull back? Because you'll see momentum push up and then pull back, but you don't know if that's an actual retracement or just like a small consolidation phase.
Exactly.
Yeah, so let's go to like 7 o'clock. Let me see if I can find one here. So for 7 o'clock, let me turn on the momentum indicator, trend meter, pivots. What else do I need? I think that's it. It's pretty much all you need. So basically the way that this strategy works, it's pretty simple too. It's the same concept. You're kind of looking for direction and then you're just trading in the direction of, momentum and trend. So for example, right here, you can see that we have, or let me just go back a little bit. So we'll just start from here. So you can see here that to identify momentum and direction of trend, you just want to make sure that you're trading the direction of momentum and you want to make sure that you're trading in the direction of the trend. For the trend meter here, I set this all back to same as chart. So just see what's going on the 1 minute. And the thing with this is that you can make adjustments or you can like trade both ways. You don't necessarily have to look at the long-term trend because you're just looking for quick movements. But you want to make sure that it's actually trending, right? Like you want to make sure that price is going down and you want to see that the pivots they're not crossing over too much. Like this is nice because it's a nice, you can see they're kind of spreading out like a fan. And they're looking good. Like it looks like a good downtrend. Like right here, this is probably where you want to be a little careful because price is going sideways on this whole area right here. The main problem with like teaching this to majority of people, I can teach it to you because you've been around for a while and you understand when market's going sideways and whatnot. But for a lot of new traders, it's hard for them to really identify when market is ranging or when they should just avoid certain trades. So like, for example, right here, I wouldn't take any trades around this area because price is going sideways. And if you have trouble with that too, what you can do is you can just turn on the high-low indicator and then just draw a zone at the nearest high lows. And then, if you draw like that, you can see that price is like literally going sideways, right? So that's one way to help you if that's a problem that you have identifying a ranging market. So I'll try to make this as simple as possible, but for this one's still a work in progress. It's I mean, for the most part, it's good, but I feel like there's still a couple more tweaks that I need to do to it to make sure that it's on point. So for example, first step you want to do is confirm the direction of momentum and the direction of trend, just basically overall direction. So right here, price is below the pivots, trend meter is red, pivots are angling down. We have an obvious downwards trend here. Second, you have momentum here for the downside. So with that said, you have momentum to the downside and you have trend to the downside. Once you confirm that, you just want to wait for a retracement. So I think this is what's going to trip people out a lot. And this is why a lot of people need me to explain on the on the live session, like how to identify retracement. But
Right.
to put simple, it's really just looking for an opposite candle. So like, for example, here we have bearish momentum, bearish trend. When I see a green candle like this is going to indicate that, okay, we're going through a retracement. It doesn't have to be a strong retracement, it's just any type of retracement.
Okay.
But once you have something like that, you're just going to look for the nearest whole number, which is going to be for US 30, there's no decimals. So the whole number is going to be like 10, 20, 30, 40, 50, 60, 70, 80, 100.
Yeah.
So right here, you can see how price retraces up, and it retraces up to 34,133. So the nearest whole number is going to be 40, right? Because that's the closest one to it. So when you see a retracement like this, what you're looking for is to enter when price gets to that 40 mark. You either put a pending order or you just enter market. For me personally, I like entering market, but if price is too far from it, or it's like there's some gap in between, I'll just put a pending order so I don't miss it. Because sometimes like it'll touch it and then you're too slow and you're gonna miss the entire entry.
Yeah.
So right here, price pulls back, doesn't hit it yet, pulls back up right there. So this one didn't get hit, or I think what happened was, I think some people caught it because they were doing it manually. And I think some people just got it because I think Maddie caught this and he went straight to his TP, but there was no actual entry there. So again, if this happens right here where there's no entry, you're still waiting for it to do the same thing again. So like price now pushed down below this point, you're looking for that retracement. So there goes, it's like a really small retracement, but it's still, I'd still consider that retracement. So again, right here, it traced up at 34,091. My entry would be at 34,100 because that'd be the closest one to it. So now I'm waiting for the same thing to happen right here. I'm looking for price to come back up, fill my order, and come down to my TP. So I think this one right here, it actually did trigger, because I know for some people they just set a pending order as soon as they see it. And you can see how it pushes up, it triggers it, and then it comes right back down on TP. Some people would have got it, some people didn't. I think I missed both of these entries because for this one over here, it didn't touch. And then for this one right here, I just didn't get into it because I didn't put a pending order like I normally do. So that's basically what you're looking for. You're just looking for price to retrace up, hit the whole number, and then come back down. My logic behind this is that I'm basically identifying where these algorithms are trading, right? Because bank algorithms, they trade at whole numbers.
Yeah.
So like if you ever look at this and if you mark up like every
a lot of rejections.
Yeah.
I've been now that I've like paid attention to it more since you've been like talking about this strategy, you can see that there are a lot of
there's a lot of bounces directly off the whole number, and they push to the next level, the next whole number. That's why like that's my logic behind it. I'm just like wanting for that little inconsistency. Like I don't care about catching the big move. I just want to get in, get out, take my profit, and move on to the next move. So yeah, this is an example of it. Typically, I only take the first one. So like if, like for example, this one right here would have been the entry, then I would be done with it. I wait for the next retracement and buy signal, and then I look for it to come back down, and that's where I make my next opportunity. But for some people, they take like every single, like they'll use one momentum, and they'll keep doing it until they lose. Because sometimes it'll come up like 5 times. Your stop loss is only 250. So, you know, if you win 5 times and you lose once, you're still gonna be in profit.
Right. So there's no way to really know when that retracement is about to start.
Exactly.
Right. Yes, why you only take the first one.
Yeah, exactly. Because you don't know when the retracement is gonna happen and it's gonna reverse on you, right? Because like, yeah, you can get lucky a couple times. And you know, if that's what you want to do, then that's fine. It's kind of similar to like what I don't want to say what Kevin does, but it's because he's taking a bunch of trades in one direction and they'll have loss and he'll switch to the buy side.
Right.
So you know, it's up to everyone's preference. For me personally, I don't like losing trades and I don't like having the idea of taking risky trades. So I just take the first one. But like if you went back and tested it, you would see that there's like man, it's crazy. Like I think we did the testing for like a couple weeks back, and there's like almost like 50 entries and like 2 losses. So it's like there's a lot of opportunities there, and that's taking like a bunch of entries within one momentum push. Because sometimes you'll
Then
see some.
so I don't necessarily need to wait for the candle to close on the whole number. I can manually enter once it touches.
Exactly. Yeah, you can just put a pending order there if you want.
Okay.
So if that happens, and I'll show you a losing trade where you can cut your losses early.
Mm-hmm.
That's what I like about this strategy. The only problem with this strategy for a lot of people is that you have to be really focused. Like you can't be taking your eyes off the chart and going to the bathroom and coming back, because at that point your stop loss is going to get hit when you could cut out like halfway through.
Minimal loss, yeah.
Exactly. You just cut your loss and I'll show you how to cut the loss here. When you cut the loss, it's usually going to be around 100 pips. So you're saving a lot, because at that point, you have another opportunity to lose another half amount. And instead of losing like one trade, you can lose like 2 or 3 trades in between. Yeah. So let me show you if there's another one here. Like here's another opportunity again. So like right here, retracement, and this is probably like the 3rd time it tested again. Price retraced right there. Whole number was at 80. You could have entered like right there. And you can see how like if you had your pending sell right there, would have triggered, and then straight TP, you would have been out of the position within like seconds. Like if you look at my trades here, that's the thing that I like about Top Step too, is that they tell you how long you've been in the trade for. So let me see my markup here. Yeah, so for today, it says that I was in this position. Well, this one was a longer trade. It was in there for like 11 minutes. So that was a long trade. But the one
what contracts do you use? Did you figure out like the normal?
Yeah, so on this one, the max contract size is 15 contracts. So for 100 or 10 points, the profit potential is 750. So it's a little different, the way that they're worth, because for some brokers, one contract is equal to one lot. I think with Top Step, it's a little less, because it's not a standard, it's a micro. So you're trading a micro basically. Yeah. So like usually you can see over here, like these trades, like for yesterday, took one trade and the trade lasted 47 seconds. It's quick. So it's literally in it, comes down, closes you out, perfect. And you can see that there's no slippage here. That's what I like about it too, because even though they're executing multiple trades, it still closes me out like perfectly at 750, like every single time. So it's nice. But yeah, so there was the other entry right there. Let me show you one where, okay, so I think this is where you would have been able to cut your loss. So say, for example, oh yeah, actually it's on this candle. So say, for example, you saw this green candle right here, right? And the next whole number would be right here at 90. So your entry would have happened right there at 90.
Right.
And see how this actually would have hit your TP. So either way, you would have won the trade. But
but that would have just been another warning of like, hey, get out if this didn't actually stop you out of the trade.
Exactly. So like, say for example, you were still in position. Like say you're going for a bigger move, right?
Yeah.
And say you got a buy signal there. At that point, you would have cut out of this trade.
Okay.
Wherever it closed. And then instead of cutting out for a small profit, you just would have cut out. I mean, instead of cutting out for a small loss, you just would have cut out for a small profit right here. Let me see another example, because I know there was one here where it actually did pull back kind of heavy. Okay, so we got this right here. We get some more whole numbers going over here. 70, 60, 50, 40. All right, let me see. Okay, so right here we had a pullback right there, retracement. It didn't go back to this area, so you wouldn't have gone filled. Price pull down lower. Check over here again. Another retracement right here. Price never pulled up, so you still wouldn't have gone filled right there. And I think at this point you kind of get like if you were looking at this at the same time I would have looked at it and been like, okay, this is overextended because it's pushed out too much. So at this point, I probably would have stopped looking for entry unless I saw some sort of opportunity there. that looked like, okay, price is probably gonna come back down. So let's see. All right. So here's the green momentum or the green retracement. Your entry would have been right here at 20. All right. So order would have been, okay. So this is the example I was looking for. So your order would have filled right there, and see how this pulled into the negative a little bit and it closed with the buy signal. You would have just closed out manually right there. So you would have closed out with a 5-point loss.
Right.
So instead of taking the full loss, you would have cut out with a small loss there, and then you would have just ate that loss and then move on to the next one, even though it would have came down to hit your TP. But this is the whole point of the strategy. It's like you can't get greedy, because this could have easily just went straight up and it could have stopped you out for 250 pips.
Right. Which is
so right. Yeah. So right here, I would have just ate the loss, and then I just wait for the next time for price to come down again further. And then let me see if there's another entry here. All right, so another entry would have happened right here. So you had your small loss there for 5 points. Another opportunity right here for entry. This again right here would be another time where you cut your losses short. So again, right here, you cut your losses at 13 points. So at this point, you've only lost 18 points. For a one full stop loss, you lose 25 points. So realistically, here you would have eaten 2 losses, but you still would have been okay, because it's not even like worth 1 loss yet.
Right.
And then price came through again. Let's see. I mean, it would have hit your TP, but again, this is where you can't get greedy. You just got to eat the losses and then move on to the next one, because eventually you're going to have another opportunity to make those losses back. So let me see if there's one more entry that came up here. Okay, so let's see right here. This is where price kind of pulls back a little bit. And she would have been at that 34,000 mark. Let's see. All right, so you would have gone to filled right here. The 4,000 mark. Price comes down, hit your TP. So at this point, you would have recouped basically your loss from this one, and then a portion of this one right here. And then you just wait for the next one. This price comes down lower. See if there's another whole number here. All right, so entry probably would have been filled again right here. I just want to see if it fills immediately on open, because the way that if you test it back, if you back test it, you can kind of see when price comes back down. Price fills it there, and then full TP. So right there, you would have pretty much made your losses back.
Yeah.
So you would have lost 18 points right here, but you would have made 20 points right here. And then if you took any of these 3 trades over here, you'd already be up 300 pips. So you got 300 pips minus 18, and then plus 20 right here. So realistically, you'd be up like close to 500 pips for the day. And that's between 7 o'clock and 8:15. So that's why I like this strategy. And this is probably going to be my main strategy, because you're able to minimize your losses, and there's more entries where you can just capitalize on it. So even if you have a loss or 2 losses, which are going to be cut short, you'll still make more profit from the future entries that come up.
Okay.
And this thing could be applied pretty much all day. I've tested it between like 7 and 12 o'clock, and that's usually like the time where you can take trades, because the volatility will be high enough. But it's
I mean, and in markets where I guess price is moving a little bit more sideways, like when the trend meter is fluctuating more between like blue and switching like colors between green and red, do you still?
Yeah, at those times, I would just sit out and I would just wait for it to start moving. I would use the pivots to be a better indication of like, because like you'll see sometimes where like for example, right here, you can see how it turns blue, like you mentioned, blue, red, green. At this point, I probably wouldn't be looking for entries anyways. Only when it's like a solid red and the pivots are spread out. Because if the pivots are spread out and it's a solid color, it's probably going to keep going in that direction. Like for example, here, like you mentioned, see how it goes from green to blue to green to blue to red. Like this whole area right here, I would just skip it. And this is like it's London session anyway, so you probably wouldn't want to mess with that until like 5 o'clock. because right here between like 4 and 5. I think the time between 4 and 5 is kind of like a dead spot too. It's kind of how 6 o'clock is. So like 4 o'clock is kind of like a dead spot. 5 picks up a little bit. 6 o'clock goes into a dead spot until 6:30, where you get that big volatility on market open. I haven't tested it during London very much, but and this is one thing that you want to look at too. So you want to be taking trades when the tenths are not too far apart. Like, see how they're pretty close right here, and you can see how they like price will come touch the 10th mark and then come back down. If you're trading during London session over here, like see how far they're more spread out. So you can see when they touch them, they don't necessarily go right to the profit target right away. So that's like another thing that you can do too. If you want to just mark up all the 10th marks, you can see how these lines are not as close as the ones that work during New York session. Or if you want to see an even clearer image, you go back to like not New York, Asia session, and you'll see that these over here are super spread out.
No, seriously, yeah.
Yeah, so at that point, you're like, okay, I probably shouldn't mess with this, right? Because you're going to be stuck in that position for like a good 5-10 minutes versus the 1 minute that you would normally hit during New York session.
Okay.
So that's another way to gauge the market, because it's hard to gauge it if you're just looking at the candles, because you're like, oh, all these candles look the same. Like you're looking here at Asia and you're like, oh, this looks like it's moving smooth. But realistically, you look at price and you're like, this thing's actually not really moving that much.
Okay.
Yeah, because the thing is, you got to cover the spread too, and the spread is like, you're trading Asia, markets is so far apart, plus the spread's extra, it's not worth the risk. Like for example, here, see how there's a green buy signal and you get a retracement here, and it just goes sideways for a long time. If it would have filled your order down here, I know it wouldn't fill your order because it just doesn't meet criteria. But or here's an example here. Actually, here's an actual example. So price pushes up right here, retraces down, and if you wanted to enter around this area right here, it'll get really close to your TP, to the next level, but doesn't actually touch it, and then does a complete reversal on you there. So I would probably just stay away from Asia for this specific strategy. If you want to do the 1 hour, you can. I would stop trading around 10 o'clock. I think 10 o'clock is the cutoff. That's my cutoff. When it hits 10 o'clock, I already know for sure I'm gonna lose that next trade. So sometimes I just cut my losses, because that's like the time where I start to notice the market either reverse or it just goes sideways for a good hour, and then it just has a big spike on London open.
Okay.
Yeah. So yeah, that's pretty much the momentum pullback, and it's pretty simple. I mean, it just takes a lot of practice and understanding, when to apply it. But the main gist of the strategy is pretty simple. You're just looking for the direction of price, and then you're looking for the retracement, and just going from basically whole number to whole number, just for a quick little move.
Cool. Well, I will definitely get to back testing. Yeah, this helps immensely. I was really just trying to understand exactly the points that you were looking for, and yeah, okay.
Yeah, no, for sure. Yeah, if there's any changes, I mean, you'll be on the live session, so you'll see if any adjustments are made. But for the most part, I think this is what we're going to be working with for time being.
Yeah, for the same.
Until anything else needs to be, changed. But for the most part, from everyone's testing, it seems like it's working great. So I don't think we need to make any changes, at least not now.
Yep.
Yeah.
All right. Really appreciate it, Sean. Thank you so much.
Yeah, no problem. Yeah, thanks for getting on a little earlier. I know it was kind of last minute, but glad we can get this knocked out.
No, it's all good. I've become a recent dog lover in the last few years, so I know how much you got to take care of them. Yeah.
Exactly. The random scares chip you out, man.
Exactly. Yep.
Yeah. All right, Nelly. I'll see you tomorrow.
All right, sounds good, man. Have a great day.